This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody, the day has come. SpaceX, yes, finally reporting after the close. I mean, it only went public in June, right? It's not such a long time ago.
But it's fallen a lot.
It has fallen a lot. I think about 40% from its IPO price. Remember, It was just those first couple of days where we really saw it move higher, and then it's pulled back, but it's rallying today.
It's rallying today ahead of those numbers. We expect those results. We can't call it earnings yet.
No,
results. Expect the numbers.
Good clarification.
Cross. Look at that, down 22% from its IPO.
Up 9% today.
Down 40% from the all-time highs earlier this year.
We are just full of numbers because when it comes to SpaceX, you got to look at all the numbers, right? And that's exactly what investors are going to be looking for on this quarterly update. It's first as a public company. So lots of questions. We're going to dig into this when it comes to SpaceX earnings and its businesses, what to watch out for. This is happening on a day when we got the S&P 500 intraday at a new record.
1.8% to the upside right now for the S&P 500. The NASDAQ composite up 2.6%. The Dow up almost 1,000 points, Carol.
I know.
1.9%. We're going to have more from Charlie in just a minute.
Risk on trade in a big way. And as we said, SpaceX, we're going to be all over that. Everything from Starlink and XAI to rockets and more in just a moment. Also ahead this hour, speaking of rockets, have you seen shares of Wayfair?
Yeah, you pointed me in that direction. They are surging higher. This after the company gave a better than expected third quarter outlook. Kate Gulliver is going to join us in just a few minutes. She's the CFO over at Wayfair.
Stock is up more than 30% today, folks. Hey, plus we're going to get into the tax strategy for the rich that built the world's largest hedge fund. This is our most read story on the Bloomberg. It's also the Bloomberg Big Take.
Also on markets and the macro, Eric Freedman joining us, Chief Investment Officer over at Northern Trust Wealth Management. $534 billion in AUM. He's just stopping by in just a minute.
Needless to say, folks, we're going to be all over SpaceX today. So reminder, we love when you guys send in questions. It's a new thing we've been doing here at Bloomberg Businessweek Daily and throughout really our audio space and radio space. Submit questions to us. We'd love to hear from you. Just ask us when it comes to SpaceX earnings. Again, we're going to be really on it throughout the next 3 hours. And of course, big time after the company reports after the closing bell.
Yeah, just to give you an idea of who we'll be talking to, then Max Chafkin is going to be joining us. We'll get Mandeep Singh on the program, Ed Ludlow, George Ferguson from our Bloomberg Intelligence team, Bailey Lipschultz, just a handful of the names who are joining us to talk SpaceX.
So to send us a question, just do it. Go to Bloomberg.com/Ask Radio, exclusively for Bloomberg.com subscribers and also for terminal clients. And then just listen to us, be part of our conversation. Again, just go to Bloomberg.com/Ask Radio and bring in all your questions. Love to hear. Also, Wayfair. We've got Kate Gulliver coming up in just a few minutes.
Well, a man who has all the answers is Charlie Pellet. He's standing by in the Bloomberg studio. He's got an update on today's trade. Hey, Charlie.
Oh, hello there. Indeed, Wayfair shares right now, they are higher by 31.7%. That kind of a day. We got to get right to the numbers. Fast-moving markets to the upside. Stocks taking off like a rocket. S&P right now up 140, 77.41 where we stand. That is a gain of 1.8%. Dow Industrials up 994. That is a gain of 1.9%. Have been up more than 1,000. Both the Dow and the S&P on track for record closes. Got to keep it locked into Bloomberg to see how things shake out at 4 p.m. Wall Street time. NASDAQ up 2.6%. The NASDAQ 100 index doing a little bit better, up now by 3.3%. The SOX, the Philadelphia Stock Exchange, up now by 6.7%. Micron, a member of that index. And right now we also have AMD up by 8.5%. Advanced Micro Devices reporting after the close of trading. The Bloomberg Mag 7 index up 0.8%. And again, the SOX surging by 6.6%. Your 2-year, 4.19%. The 10-year, 4.62%. And spot gold up $33 the ounce, $4,087 now, up by about 0.8%. Yes, earnings, a key catalyst for today's move higher. Case in point, Palantir up by 30.1%. but also a move lower for crude. That's helping lift stocks. WTI down 5.5%, 75.88 a barrel. Brent 79.38 barrel of Brent crude down by 5.2%. Coming up after the close of trading, as I mentioned, AMD up 8.6%. The countdown also underway for SpaceX earnings. Liftoff after the bell. SpaceX right now up by 8.6%. Lots going on. Carol and Tim, that is a Bloomberg Business Flash.
Well done, as always. Charlie Pellet. Hey, it does have the excitement of a rocket launch. I got to say, we've certainly been counting down since its IPO in June. SpaceX's first earnings, as we've been reporting, that release, as you say, a release, because we don't really expect any kind of earnings or profits there. Following its record initial public offering is one of the most anticipated reports of the summer for traders on Wall Street and beyond. Whether it'll give investors a reason to buy, though, this sinking stock is another matter, because it's down below the IPO price, I believe.
Yeah, down 40% from all-time highs reached just a few weeks ago. Reporting out on the SpaceX story in the company when it was private. And now that it's public, Bloomberg's Loren Grush joins us. She's Bloomberg News global space reporter. She joins us from Austin, Texas. So Loren, what are the key segments or key metrics you're looking at in today's report?
Well, for me personally, I think I'm going to be keeping a big eye out on all of the things that they have promised the IPO on, right? Launching their new Starlink satellites, those upgraded ones, and then eventually getting to those AI data center satellites, right? And all of that really hinges on Starship. I know I sound like a broken record whenever I come on these shows, but Starship, as they laid out in their prospectus, is key to their entire future. So updates on Starship, where they think they are going to be at the end of the year. Are there any technical setbacks that they think are going to hold them back from reaching all of those things that they want to achieve with Starship, such as full reusability? When can they start launching satellites on it in earnest? When can they start, doing all of that other research and development that they need to do in order to make it a deep space vehicle? That's what I will be keeping tabs on, at least for me personally.
Well, what's interesting too is we've been counting down, and I've got to say, even in the newsroom, we're all kind of excited about it. It's interesting. It's an interesting company. It's Elon Musk. Is Elon going to be on the call? Do we know?
I'm a novice just like everybody else here. This is my first earnings call as well. As you mentioned, I've only covered SpaceX as a private company, and a very notoriously private company at that. So I think we can assume that Elon will be on the call. He's usually on the call for the Tesla earnings. But it will be interesting to see who all is talking during this event today. But yeah, it's uncharted territory for me as well, and I'm actually looking forward to it, because this is a really new moment for me.
Yeah, I agree with you. I think we all are looking. I think our Paul Sweeney actually came off air, and he said of our Bloomberg Intelligence and Bloomberg Surveillance team, and he just said, you guys are going to have an interesting and exciting afternoon, Tim.
I'm looking forward to it. I'm glad Loren can give us a little preview. Gwen Shotwell, she for many years has been at the helm of this company as the president and COO of SpaceX. Certainly Elon Musk gets a lot of attention, but there are a fair number of folks say Gwen is the one who really makes things work at the company. Do we think we're going to hear from her?
I would imagine we would hear from her. As you mentioned, she's often referred to as the adult in the room sometimes, at least when I've heard people talk about her. So I wouldn't be surprised to hear her voice as well. And then probably also, from their investor relations team too, Brett Johnson. So, I would expect it. But again, like I said, I'm flying in blind like everybody else.
Yeah, it's kind of wild too, Loren. The most bullish and bearish calls, of $800 for Raymond James on SpaceX's stock price, $62 for Morningstar are wide, to say the least, as is the gap between Morgan Stanley's 300 and HSBC's 115. This is the point that even those that are bullish on this company, like the gap in terms of where the stock should be, there is such a long list. Is there one question, like if you had to whittle it down to one question, is it about the Starship rocket that has to be asked and answered on the call in some form or another?
Well, from my understanding, I think the slump that we've seen in the share price might not even really be coupled with, how the company is performing at all at the moment. I think most of the speculation has been that it's tied to this really weird and complicated lockup schedule that SpaceX had laid out for its employees. And I believe the first of those lockup expirations do occur after this earnings call. So I do wonder if it's mostly tied to that. I think also it might be tied to the uncertainty around the AI business. SpaceX is a relatively new AI company. I've never really even known it as an AI company. So, that I think is also causing some uncertainty for the stock price. So I can't even tell you if, all amazing results on Starship will actually have an impact because, they did have a relatively successful test flight back in July. And, look at the stock has still seemed to drop. So right now, I'm not sure it's actually coupled with the performance of the company. But again, maybe we'll see some kind of bump. We're already seeing a bump today. That might just be anticipation ahead of the earnings call. But again, it will be interesting to see, what kind of technical details they release and if that does have a meaningful impact on the share price.
Loren, you say Starship, relatively successful launch recently. What are we still waiting for? What benchmarks is SpaceX still waiting for to prove Starship's reliability?
Well, I think something that most people don't realize at the moment is that Starship has actually yet to achieve orbit. So on these test flights, they've all been suborbital. They have reached kind of near orbital speeds, but the Starship itself has actually not gone to orbit. Now, that is anticipated to happen on the next test flight. Additionally, because the vehicle performed so well on the last test, Elon has indicated that they are hoping to catch a Starship rocket after this next test flight. That has never been done before. So there's some big milestones coming up that could, really put the company ahead in terms of its goals. But again, this has been described as probably the most complicated vehicle ever created in terms of spaceflight. So there's probably quite a few challenges ahead in terms of unlocking all of that, all of those goals that they have for the vehicle.
Yep. Space hard. Yep. Got it. Hey, listen, what about in terms of, just to kind of wrap it up here, XAI, do we need to hear some stuff about this and their recent purchase and kind of what they're doing here and maybe how it all ties into CapEx, which is something we continue to watch with these companies?
Yeah, absolutely. I think one thing that caught a lot of people's attention during the IPO process was the just sheer amount of capital expenditure that SpaceX, is spending each year. Again, a lot of that was tied to the AI business, which was newly acquired. So it was kind of, retrofitted into the business itself. But it just goes to show just how much money AI requires. Even compared to rockets, which, I naively thought would be the more expensive business, but it's just a capital intensive. The infrastructure involved with AI is proving to be extremely capital intensive. So I imagine the amount of cash burn will definitely be a focus and how that compares to the amount of revenue that business is bringing in.
AI expensive, that's for sure. Hey, Loren, we're going to be watching you and the team really closely and everything that you guys put out following the release. Thank you so much. Great setup. Loren Grush, global space reporter at Bloomberg News. As we mentioned, shares of SpaceX, which are still trading near below their IPO price of $135 a share. Tim, they're still up about 9% in today's session.
Okay, certainly on the minds of investors, we know that. Let's see if our next guest is as focused on it as we are. Eric Freedman joins us, Chief Investment Officer over at Northern Trust Wealth Management. The firm has more than $500 billion in assets under management. He joins us from Chicago. SpaceX, I know you can't talk individual names, but your wealth management clients, do they care about this company's report?
Tim, they do. And thanks for having me on. I think the biggest factor that investors are focused on is just what are the layers of AI that still have some opportunities to perform. And we kind of stack rank them as really compute as number one, and probably memory would be second for us. So we don't think it's as easy as saying, hey, look, are you spending on artificial intelligence? We think it's more about, are you monetizing within this ecosystem? So what we hear from SpaceX, obviously what we heard last week from Meta, what we heard from Microsoft and others, that aggregates into what we think is still a glass half full bullish picture. But again, micro discussions on SpaceX and individual companies certainly aggregate to those larger conversations about what's still working and what is still, again, an opportunity to add value for client portfolios.
Eric, one thing I do wonder, do they have exposure to SpaceX? Do they want exposure to SpaceX?
Yeah, Carol, one of the great things, this is meant to be an advertisement for Northern Trust, but we've been involved in the private markets. We're involved in
Right.
public markets with companies like, like SpaceX and others. So again, we think the strategy for us is to be involved early when a lot of these companies are still in private form, and then obviously to participate selectively when they go public. So yeah, so clients certainly have levels of exposure. To your earlier point, the fact that we have so much index participation in all parts of AI, certainly another lever that we're paying attention to. But it is certainly an area of focus for us as investors.
So beyond SpaceX, I'm always curious, Eric, you are investing for your clients, you're thinking about long-term wealth, but what is it that is so important? Has it been things like earnings, Fed policy, geopolitics, the US war in Iran, the upcoming midterms? Is it about how to reduce taxes on your clients' investment gains? What is it that really kind of, you think about most?
Yeah, Carol, it's great framing. And again, you all do such a nice job of going through those variables, because it's been an eat your pasta sort of year, given the extent of things we're focused on for clients. So certainly tax and inflation, those are things that clients are very focused on. Again, thinking about strategies that can add value, again, not just to defer taxes, but again, to be thoughtful about tax loss harvesting. That's certainly not an opportunity of focus. We also think, again, the notion on inflation, we're 18 years, Carol and Tim, in an environment where we've had the 10-year treasury below 5% in yield terms. That's a very long time. So clients are very focused on things like, hey, is there an issue here in terms of credit? And will there be some concerns if we do see that low interest rate environment go away? That does provide opportunities. One thing we're talking a lot to clients about right now is moving away from cash and into things like municipals. If you're in the tri-state area, like the two of you are, if you're in a higher tax state like California or Illinois, there are opportunities to pick up, in some cases, 275 to 300 basis points of incremental yield pickup once you factor in tax equivalent yields federally as well as in a state specific basis. So with higher interest rates and also levels of again, focus for us in terms of saving clients, but also providing some carry, things like municipals offer, we think, an interesting opportunity to get involved here.
So muni is an opportunity for your clients. You mentioned that there is this low interest rate environment that we've been in for almost 20 years at this point. With concerns that rates could go higher, do you have a lot of cash on the sidelines in client portfolios right now?
Not much, Tim. In fact, one of the things that we've been talking a lot about is, our position within real estate has actually been slightly underweight. We're actually overweight infrastructure, which has really helped. But, all things are an AI trade right now. And so real estate has been an area where we've been a little underweight, which, again, we think is probably appropriate given what's going on in commercial. But that being said, there are some values that pop up. Where we would have more concern, Tim, would actually probably drive us to raise some cash as if we were to see, again, a 5 to 5.25 type of 10-year treasury yield with a couple of challenging auctions. Again, bond auctions are pretty boring to watch. Your colleague Lisa Bromwitz loves them. We love them as well. But if we were to see some stepping away from the plumbing of again, the treasury market, that for us would be a concern. Probably the first place that shows up is what happens in commercial real estate. Not a topic a lot of people are focused on, but something we're certainly paying attention to as we think about forward allocations.
All right, great stuff as always. Come back soon. Eric Freedman, thank you. Chief Investment Officer over at Northern Trust Wealth Management. As we mentioned, they've got $534 billion in assets under management, and he was joining us, of course, from Chicago. All right, folks, as we head to a break, you might say shares of Wayfair flying off the shelf.
Just like furniture.
Maybe.
The stock's soaring more than 30% following its latest earnings report. The CFO Kate Gulliver is joining us on the other side on Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks ripping higher, oil lower, Dow Jones Industrial Average, S&P 500 Index, both at records right now. A 1,000-point jump on the Dow, up now by 1.9%. The S&P 500 Index holding very close to session highs, trading above 7,700. S&P now at 7,745, up 145 points on the S&P 500 Index. That is a gain of 1.9%. NASDAQ up 2.7%. The NASDAQ 100 index up 3.4%. Small caps taking part in the rally, with the Russell 2000 index up now by 1.9%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up 6.8%. Advanced Micro Devices, of course, a member of that index. It reports after the close of trading today. AMD up now by 9%. The 2-year yield, 4.19%. The 10-year, 4.62%. And the 30-year, 5.19%. Spot gold, 4,086 the ounce. Spot gold up 0.8%. I mentioned the retreat for crude, 75.68 a barrel. Crude down 5.8% right now. Brent, the global benchmark, holding below $80 a barrel. Brent, 79.27. Barrel of Brent down now by 5.4%. All of this on hopes for a deal to revive the Strait of Hormuz. Pharmaceutical companies reporting earnings today. Case in point, Merck shares. Merck after earnings right now. We do have Merck shares trading up by 0.7%. Pfizer after earnings up by 1.6%. Also reporting earnings after the close of trading, SpaceX. Ahead of that report, SpaceX up by 8.1%. Palantir reported last night up 29.6%. Wayfair after earnings up 31%. I'm Charlie Pellet. Carol and Tim. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. All right, we want to get to Wayfair. Investors, man, are pushing this stock up big time today. Shares surging 31% as we speak after the home furnishings retailer said sales at the U.S. grew at their fastest clip since 2021, helped by a growing number of brick and mortar stores, which has been a new initiative for them over the last few years and growing. And also sales growing, helped out by demand for some of its higher end brands.
Yeah, the stock up 17% year to day. Earlier today, as much as 32% intraday highs, the most going back to April of 2020. Some perspective, the stock's still down, Carol, 66% from that peak. That was back in March of 2021. But today, soaring higher.
Yeah, big time. So we're delighted to have back with us, joining us once again, Kate Gulliver. She's the Chief Financial Officer and Chief Administrative Officer. We like to remind everybody that Kate oversees finance, legal, talent, real estate, corporate affairs at Wayfair. She has a full plate. So delighted once again to find some time for us. She's in Boston, where the company's based. Kate, good to have you here. Congratulations. Killer quarter.
Thank you.
Talk to us about the momentum.
Well, I think you just said it, right? It's nice momentum over many quarters now. And so I think what you're seeing is really the sort of multitude of initiatives that we've laid out, the consistency of that playthrough, and building momentum there, and that reaction is a result of those factors. So that U.S. revenue growth of nearly 9%, the highest in the post-COVID period, the flow through to really solid contribution margin, high EBITDA margin, and then best free cash flow that we've had since Q2 of 2020. And so all of the things that we have been working on to drive and improve that customer experience continue to come together, help us gain share, and we're flowing that through quite nicely.
Who are the customers who are buying right now? Because when you hear a superlative like, most since post-pandemic days, you think to yourself, okay, well, who are the customers who have the money right now to be buying this stuff?
It's a great question. And we actually went on the call, we went into a little bit of detail around Paragold, which is our luxury brand. It's of our sort of family of brands that plays at the highest end of the market. And we do see really nice momentum there. We said that was growing north of 30%, right? So you do see nice momentum in the higher end segment, the top part of that K-shape, if you will, in the K-shaped economy. That said, Paragold is only, a little over 400 million. So when you think about the overall Wayfair business, the Wayfair.com brand, that mass market brand, has to also be performing well to get to that 9% comp. And so what we're seeing there is ongoing share gain. And we think that's from programs like our Wayfair Rewards program, programs like the stores, which, Carol, you had the opportunity to see, programs like our Wayfair Verified. The combination of those things is helping us both attract and retain these customers and have them engage more and more.
Tell us about the stores. My understanding is that more than 50% of store customers are new, but tell us about, that's a big investment, Kate. We've talked about it. I did go there. I was kind of blown away by the size and the scope of it. You guys continue to add stores, but tell us about, we kind of marveled over how everybody had pushed back on brick and mortar for years. And so interesting, that you're finding success with it, but tell us how this is really moving the needle for you.
Yeah, it's a great call out. I think we're seeing that folks really do desire that multi-channel experience. And, the stores are supported by e-com and e-com supported by the stores. Now, obviously it's very early days on the stores. So they're a very small piece of this overall momentum. We've had the Chicago store open now for a little over 2 years. Atlanta, where we were able to meet, has been open since early spring. And then we opened Columbus about a month ago. We've also announced Denver opening later this year, and then 5 more stores into 2027. So the momentum, to use the word of the day, is building with these stores, but it is early days. But what we're seeing is customers, are new to file. So they're new customers coming to the store. It's been a great acquisition channel. Customers are also getting exposed to the breadth of what we offer. So engagement in more sort of frequency categories, decorative accents, seasonal decor, being able to touch and feel the product is a win for them. And with that combination of the breadth of selection that we offer online, that's very compelling. You
mentioned Paragold, this higher end brand, and it's actually like it lives distinctly from Wayfair.
Yes.
I'm wondering about the momentum that you're seeing there, but also the momentum that you're seeing more broadly, and how you're confident that it's sustainable.
Yeah, it's a great question. I think it goes back to the fact that most of this momentum is coming from self-help measures, right? So these are our own initiatives that are driven by it. We think the category itself is, overall roughly flattish. And, the category's been in a complicated place over the last few years. So, flattish place is a nice place to operate from. But the, close to 9% comp in the US, that's driven by us gaining share. And so what we can see is the building blocks of these pieces getting into place, and then we see how they compound on each other. So the Wayfair Rewards program, for example, is supported by Wayfair Verified, which is also supported by improvements and changes to the storefront experience. And then to your point around Paragold, it does have absolutely its own, separate go-to-market facing site, but it leverages the entire back-end infrastructure. So the logistics infrastructure across, Wayfair Inc., the tech stack, the ad tech stack across Wayfair Inc., how the storefront evolves. And so we're able to test things on Wayfair and then push them out to, Paragold or the specialty retail brands. For example, Wayfair Rewards started on Wayfair, and that'll be launching at some point over the next year in the Paragold system as well.
But you have to concede, Kate, we talked about this, existing home sales still, not on fire, like the housing market. Yeah. But to see these results amid that backdrop, if that stays, let's say existing home sales is depressed for another 12 to 24 months, you guys have talked about kind of growing, I think it was roughly 20% growth through company-specific initiatives. I think you said it earlier this year. If we kind of still remain somewhat depressed, do you still feel like you can achieve those goals? Or does it require a housing recovery? Because it is pretty remarkable in this market to see these results.
Yeah, so I think you're referring to Neeraj and Steve, our co-founder shareholder letter earlier in the year, and they talked about these initiatives that could get us back to that, double digit, and then, from there to that 20% growth. And we do have a high degree of conviction in that. We feel very good about these initiatives and the building effects of these initiatives. Obviously, again, that close to 9% comp on the US this quarter, that high single digits guide. So we're building there, but the momentum is sustaining.
You mentioned the way that you're doing this internally and the way that you're gaining share from a market that is relatively flat. Wayfair Rewards, how does that play into that and the metrics that you're seeing there? What changes are you seeing when it comes to frequency, retention, customer lifetime value, payback relative to folks who are not members?
It's a great question. So what we, wanted to try to do with Wayfair Rewards was exactly to drive up that frequency. The average Wayfair customer shops, with us or buys with us just under 2 times a year, whereas a Wayfair Rewards customer is, 3 times a year, right? So you're seeing an incremental purchase from them, which at an AOV of $300 is pretty meaningful. And so the Wayfair Rewards program is really designed around frequency and ongoing engagement for the consumer. And we are seeing that from those rewards customers. We're also seeing them shop categories that are not, we are very well known for furniture. The rewards customers, though, are shopping decorative accents. They're shopping kitchen and accessories. In some of these categories, they get preferential pricing or they get early access to sales. And so those things sort of reinforce the quality of the experience for them in that rewards program. And then on the P&L, we've talked a little bit about how obviously rewards has an impact on gross margin because of the cash back element of it. But it's helpful on what we really look at, which is contribution margin, because the rewards program, costs less obviously on an ongoing basis to get that incremental sale. So a lower ad cost as a percent of net revenue, meaning it would be accretive to the contribution margin that we really look at and ultimately to EBITDA margin, EBITDA dollars.
Hey, Kate, one of the coolest thing is you guys really are a technology backbone, and you go back to the origin of your company, which is really interesting if you think about, kind of what's going on right now. You've partnered with different platforms, whether it's OpenAI, Perplexity, when it comes to agentic commerce. So what key performance metrics are you guys seeing when it comes to AI-driven shopping specifically? Is it a meaningful contributor when it comes to traffic or to sales? Are you seeing that?
Yeah, it's a great question. So we work across many of the LLMs. You mentioned a few. We also work with Gemini. We've said that we're an early partner on Universal Commerce Protocol through them. We do see traffic today is small from these sites, but it's growing meaningfully, right? So it's small but rapid growth. We think it's really important to be where our customer is at. And so if our customer desires to shop through these channels, we want to show up well there, whether that's, through actual shopping like Universal Commerce Protocol, or, through ads like on OpenAI, or if that's through, better search performance and how you show up in LLM-based search, right? So all of that, those are all things that we look at and that we work with a variety of these partners on. I think this is a place where our scale benefits us. We have nearly 25 years of history and data here. And we know both, one, how to work with these partners. As you said, we're technology first, and two, we bring to it, some important data in terms of how we're able to show up there. And I think that helps the customer ultimately, because if our customer, wants to be using the platforms and shopping there, we'll be there. If she wants to come to us through the app, we're there. If she wants to, go into a store and shop with us, we're there as well.
All right, we got to leave it there. Kate, so great to get some time with you. As always, the stock, as we mentioned, it's up 30% as we speak. So investors certainly liking what they heard. Kate, be well. Thank you.
Thank you.
Kate Gulliver, she's Chief Financial Officer over at Wayfair. She's also Chief Administrative Officer, joining us from Boston.
Hey, coming up next, it is today's big take. It's one of the most read stories on the Bloomberg terminal. AQR showing the richest 1% how to slash their taxes to zero.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index holding close to our record. Yes, off session highs, but still looking at a gain of 1.9%. The S&P at a record 7742. It is up 142 points, trading above 7,700. Dow Industrials above 54,000. The Dow up 974. Have been up more than 1,000 points a few minutes ago, up by 1.8% right now. NASDAQ 100 index up 3.3%. NASDAQ Composite Index up now by 2.6%. The SOX, the Philadelphia Stock Exchange's Semiconductor Index, is rallying by 6.7%. The VIX right around 16 right now. And by the way, member of the SOX is Advanced Micro Devices. AMD reports after the close of trading today. AMD up now by 8.5%. 2-year 4.19%. The 10-year 4.62%. And a 30-year 5.19%. Gold at $4,079 the ounce, up 0.6%. Much of the rally today sparked by the decline in crude. West Texas Intermediate down 5.5%, 75.90. Barrel of Brent below 80, 79.54. Brent crude right now down by 5%. Earnings news. Caterpillar reported this morning. The industrial giant up by 6.5%. McDonald's, meanwhile, naming a new U.S. president. McDonald's shares, they are just about flat on the day. Little change, actually, up now by about 0.1%. Jefferies Financial Group shares down 0.5%. Now, Jefferies has been told that some of the invoices underpinning its financing of an iron ore trader called Sapphire Min Metals Corp are not genuine. That's according to people familiar with the matter. Jefferies again down 0.5%. Whole lot more on this topic coming up in just a moment with Bloomberg's Sri Natarajan. Recapping, S&P at a record up 142 points, up by 2%. We've got SpaceX after the close of trading. SpaceX up by 8.7%. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, gotcha, Charlie. We're going to pick up where Charlie wrapped up there and talking about Jefferies Financial. The group has been told that some of the invoices underpinning its financing to an iron ore trader called Sapphire Min Metals, are not genuine. This is according to people familiar with the matter. This has been a story that Bloomberg's been reporting out over the last week or so. With more is Bloomberg News Chief Wall Street Correspondent Sri Natarajan covering the financial space. He's here in studio. For those who maybe haven't been following, there's been a lot going on. What do we need to know?
Look, this is the latest in a series of incidents which is shining more light on the risk around receivables finance. Typically, ordinarily, this should be safe. You are lending against invoices. It's secured by invoices. You expect your client to be ultimately paid and you expect to be paid back. When it goes right, it is good money for the lenders. But there are occasions when it can go wrong and it can go horribly wrong. And that's we saw it last year with First Brands and the collapse around First Brands and all the allegations around fraud and scam that came out. Now, over the last week, we've seen these instances first with Radiant World that Bloomberg reported last year. And now another company, Sapphire Min Metal, which seems to be somewhat tied to Radiant World, at least at some point. Radiant World and its owners were majority owners of Sapphire Min Metal. But the interesting bit for us is the connection of Point Bonita. Point Bonita is a trade finance focused fund at the asset management division of Jefferies. So it's just another black eye for Jefferies at a time you really don't want your investors to be asking you more questions about your investing missteps.
Is this you mentioned some other examples of this, including last year. Is this part of a pattern of events, or is this just the latest one-off?
To quote Jamie Dimon, it certainly feels like another cockroach out there. Now, your question is it an infestation? Not necessarily. Is it going to have material financial impact on Jefferies? Not necessarily. It has a 5.9% stake in Point Bonita, but does it leave a bit of a sour impression for their investors and for analysts and for people wondering about banks and other investors and their tie-ups with other trade finance firms?
Oversight,
Yes.
right? Like oversight, like what is it? Like, assessing risks and so on and so forth.
And to some part, you have to assume like some of the allegations that we're talking about is falsifying invoices. And again, to be clear, Radiant World denied those allegations last week. Sapphire Min Metal in our story today is denying those allegations again. But when you're if it is what the allegations are, that is outright fraud, you also have to wonder how easy is it for some of these firms to be doing all the diligence that's required? How do you completely ensure that you snuff that out? And that might not necessarily be possible, but your investors will expect higher standards and much better diligence going forward. And that will focus people to reassess their processes to be able to sniff out risk and to be able to avoid some of these landmines.
Goes to reputation, right? Ultimately. And again, we should say there's still more to be known here. So we're
a lot more to be known.
We're going to continue following it. We got to get to
I want to get to the
big take.
Yeah, this is one of the most read stories on the Bloomberg terminal. It's a tax strategy for the rich, built the world's largest hedge fund. You and the team behind one of the most read stories. This is about tax loss harvesting on steroids.
All right, this part of me is like, oh my God, but it's actually pretty cool.
It is cool. What has AQR figured out and what is AQR doing?
And again, well, on the one hand, Carol, I am slightly offended that this wants to make you snore. But
I hear taxes, but I know this stuff is really interesting.
But that's correct. Like we're used to these ideas of tax loss harvesting and finding ways in investments where, with the growth of the technological tools available to us, with the sort of ETFs and commission-free trading, you can do a lot more of these things. But what is happening when you pit a lot of mathematicians and PhDs in a room together and come up with strategies? You suddenly do what Tim rightly described as taking these strategies and applying steroids on them, that they become so much more potent. The advertising from firms like AQR is like, if you put money in with us, not only will we make sure that your money grows over time, but the interim, we will also keep generating losses that you can use to write off your capital gains elsewhere.
I don't get it. How can you put $100 million into an account? It then triples over the next few years, but then you also have hundreds of millions of dollars in losses to use against other gains.
Aha. And with that, we shall explain what tax alpha is and exactly how this process works. So we're very specifically talking about these tax-aware long-short strategies. Assume you have $100 million. You were an early NVIDIA employee. Your stock has gone up quite a bit. You suddenly have $100 million. But if you wanted to realize those gains, you also have a hefty tax bill coming against that. Mm-hmm. So you go to an AQR, maybe you set up a separate fund with them where you put in that $100 million. Against that $100 million, AQR can go and borrow some money. Say they borrow $80 million against it. They can put $40 million of long bets. They can put $40 million of short bets, broadly tracking some of the biggest companies out there and some of the biggest name in the indexes, but with the hope that your longs always go up and your shorts are always going down so that your fund is performing well. But that's not always guaranteed. Yeah. On a day-by-day basis, that's not going to happen. Some days your bets will go wrong, even if over the long term you were right. But on the days it goes wrong, say if the market goes down, you can sell some of the longs because you've now realized losses against them, replace them with a surrogate. On the days that the market's in this bull mode, your shorts are not performing well. You close out those positions and replace them with a surrogate. So what you're doing is in the interim, you're harvesting these little losses that start to pile up. And in the long term, you make money. So eventually, what does the money look like? AQR says, and an example for one of their flex products is you put $100 million with them. Over 10 years, they say your money can triple. Very good returns. Mm-hmm. At the same time, they will also generate $587 million in capital losses over that 10-year period. That is a lot of money to be able to write off capital gains in other parts of your portfolio. You can see the allure for the richer. You can see the allure for so many people wanting to go into a strategy like this.
Yeah.
Legal, for the most part, seems to be. No one's really said it's illegal. We have had noises from the Trump Treasury, from the Trump administration saying some of these trade and some of these more aggressive tactics seem to be potentially abusive, but nothing that anyone has really offered out there that closes these loopholes or has outright banned them. But at the same time, they are quite effective. And as our own Matt Levine once said, it's very hard to beat the market. Much easier to beat the IRS. With that pitch, you can attract a lot of money, and that in part has propelled AQR to become the world's largest hedge fund because in the last few years, these strategies have soaked up a lot of investments.
Not easy for everyone to beat the IRS.
No, and I will say,
another part of the story.
A great part of the story, too, is just Cliff Asness's view about taxes and what he said about them. It's just fascinating, a profile of him as well.
Check it out. It is the most read story on the Bloomberg. Sri, I'm not bored anymore. No snoring, I promise. He is our chief Wall Street correspondent.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody. Is my mic up?
Oh, it's up.
Sorry.
Just got to crank your volume. I hear you.
I know how this works.
I hear you.
I know. Not my first time at the rodeo. Okay. Hey, we are seeing stocks just off their highs of the session. We are up about 1.9% on the S&P 500, up 145 points. Dow is up almost 1,000 points, 1.8% to the upside. NASDAQ 100 up 3.4%, 978 points higher. And you take a look at a name like, which we are kind of obsessing about today, and I'm going to just put it out there, SpaceX. It's still up just shy of 9%, 8.8% to the upside.
Okay, what's the SOX doing on a day like today when we've seen the SOX move?
Tell me, Tim Stenovec.
Well, the SOX is up close to 7%.
Unbelievable.
Yeah.
Right?
I mean, it's one of those days where
Yeah.
I'd say it's fair to call this a broad-based market move higher.
I also saw that
yeah.
I think bonds are higher and yields have backed off as well, which is interesting. It gets to the conversation that we had with Torsten Slok at Apollo Global Asset Management yesterday about this, 60-40 model being broken because you continue to see, because of the AI trade and the narrative, that kind of some of the business cycles, the fiscal concerns that often shaped where stocks and bonds went traditionally, that has come unhinged. And so it's just different. It's a different environment when it comes to the trade, but you don't normally see stocks and bonds go up in terms of their prices.
Maybe somewhat of a different environment for oil today too, with Brent down below $80 a barrel. It's 5% to the downside today. WTI down 5.7% today, still at 75.80 a barrel. Both of those up more than 30% so far this year, but it does show the optimism that traders across assets have about some sort of pause in the conflict, a reopening of the Strait of Hormuz for today. I'm glad you said that.
I don't want to be a pessimist. I would like to see this war.
But look at markets.
But I know.
They're not being pessimistic. They are looking past this completely.
Exactly. All right. Well, we're going to keep an eye on
Torsten
all
wasn't
that.
yesterday.
Oh, he wasn't yesterday?
No. He wasn't looking. No, he was yesterday, but he wasn't looking past this yesterday.
What are you saying?
No, he was. He was here yesterday. He was here, but he was very cautious about, especially on the oil side, about the oil market maybe not seeing this 100%.
Exactly, right? Because he was talking about some of the stuff and the concerns and running out overseas, Europe and elsewhere. All right, keeping a watch on the markets. I'm Carol Massar along with Tim Stenovec. Let's get to some stocks on the move on this Tuesday. With us is Bloomberg TV markets correspondent Nora Melinda, joining us with Stock Movers. Let's talk about one that reported earnings after the close late yesterday.
And the best performing stock in the S&P 500 today. We're seeing Palantir heading for its biggest jump since 2024. Now, this comes after the company did report that commercial sales rose 149% from a year prior. Now, this really is just pushing behind all the skeptics that had been thinking about whether or not Palantir was actually going to be able to continue forward in this race. Citi is saying that it defied some of those critics, those skeptics there. We know that the company raised revenue and profit, both the forecasts there. And the CEO also called its demand for its AI software, quote, otherworldly. So you are seeing the stock really being celebrated today. It was down about 29% year to date through yesterday's close. Take a look now, and it's down just about 9% for that time frame.
Still 21% lower than its November high.
Right.
Not to be a party pooper, but just, But you're right. Investors buying in a big way. All right, let's head to Wayfair. Its company, Tim and I talked to the CFO, Kate Gulliver. I mean, this stock is just off and running today.
It is, and the ticker is pretty simple, W. Its U.S. sales actually grew at their fastest pace since 2021, so maybe we're back to those pandemic days where everyone's remodeling and bringing some furniture into their homes, but we really did see this all being buoyed by the fact that they're leaning a bit more into brick and mortar stores. We know that Wayfair has really been an online company for quite a while, but they have been branching out into some of those physical stores there. And then also demand for some of its higher brands, its Paragold line I'm less familiar with, but apparently it's a hit. We're seeing shares of the company up about 15% for 2026.
Yeah, Kate Gulliver told us what a hit. She mentioned that part of the brand specifically. I mean, this is a standalone brand. You know much more about this than any of us.
And she did point out that it's about, I think, $400 million in sales. So she did say, in terms of the perspective of the overall revenue line, but growing that higher end. And I'm assuming maybe comes with higher margins, but, we will see. But she also did talk about the stores that they have opened. I visited the Atlanta store, but they've got 5 more stores coming into 2027. So this is certainly an initiative, and they're finding that they're getting new customers, Wayfair customers, that are coming into their stores specifically. So it's definitely been a boon for them. Just got a few seconds left here. Let's go to Chipotle.
Maybe let's go. I don't know.
Maybe we should avoid Chipotle for the time being.
It seems like investors are avoiding Chipotle.
They are avoiding Chipotle. That's after a Bloomberg exclusive did report that the company removed jalapenos from multiple stores in Minnesota. Could be linked to salmonella, a salmonella outbreak that essentially has made about 110 people ill. But the full scope is still unclear, but we have been seeing that customers at other Mexican-style restaurants have also fallen sick. If you think about what we've been watching so much when it comes to the food poisoning and the cyclospora, right? This is, of course, something that is daunting for a lot of investors right now.
Yeah, according to the story, Chipotle proactively removed the jalapenos and replaced them with products from different growers, quote, upon learning of a potential salmonella outbreak in the supply chain impacting several food service retailers. This according to Lori Shallow, Chipotle's Chief Corporate Affairs and Food Safety Officer.
All right, so keeping an eye on all of that. That is your Stock Mover segment. Nora, thank you so much. Nora Melinda there. Check out Stock Movers, 5-minute episodes, big winners and losers. You can find it on Apple, Spotify, Tim, or anywhere you get your podcasts.
Let's go to space.
I'm ready.
Are you ready?
I'm so excited. I actually am.
Falcon
pretty
9
psyched.
or Starship?
Well, we're waiting on the Starship.